This week's Brandon's blog is our complete guide on Canada's 2025 economic illusion. Canadian net worth has risen on the back of markets and housing, while household debt to income keeps climbing and growth stalls. In this Canadian-focused DTI guide, you will learn what the household debt to income DTI ratio is, and why Canadians now owe roughly $1.75 for every $1 of disposable income. How net worth can rise on paper wealth, while many families feel poor in real life. Why rising DTI, record household debt, and softer growth are creating a dangerous economic illusion for 2026. How a K-shaped economy is widening the gap between asset-rich Canadians and those struggling with debt and shrinking savings. Practical steps to lower your DTI rise on paper wealth, while many families feel poor in real life. Why rising DTI, record household debt, and softer growth are creating a dangerous economic illusion for 2026. How a K-shaped economy is widening the gap between asset-rich Canadians and those struggling with debt and shrinking savings. Practical steps to lower your DTI, rebuild your safety net, and protect your household or small business if conditions worsen in 2026. My name is Ira Smith, President of Ira Smith Trustee and Receiver, Inc. If you feel like you are on the downward arm of that K, with rising payments, less savings, and more stress, you are not alone, and there are government-regulated solutions that can provide a real, legal, fresh start. As licensed insolvency trustees, the Ira Smith team can help you confidentially rebuild your safety net and protect your household or small business if conditions worsen in 2026. If you feel like you are on the downward arm of that K, with rising payments, less savings, and more stress, you are not alone, and there are government-regulated solutions that can provide a real, legal, fresh start. As licensed insolvency trustees, the Ira Smith team can help you confidentially review your situation and explain all available options. We are a true family business. We are not for everyone, but if we take you on as a client, you will be provided with first-class service and expertise. So, if you have any questions, either about this video or anything else at all, shoot us a message, give us a phone call. We would love to speak with you. I hope you can watch until the end of this video and that you find the information helpful.
Welcome to The Explainer. Today, we're digging into a really confusing economic picture that's unfolding in Canada right now, all based on the latest numbers from Statistics Canada. Okay, so let's just dive right into this central paradox, shall we? How is it even possible for the country's economy to be shrinking while at the same time households are actually getting richer? We're going to unpack this whole thing. So first up, to really get what's going on, we have to look at these two headlines that seem to completely contradict each other. On one hand, you've got the national economy, which actually shrank by 0.4% in the second quarter of 2025. But, and this is the crazy part, in that exact same period, Canadian household net worth went up by 1.5%. And we're not talking about a small jump here. This was a massive surge of over $257 billion in a single quarter. It brought the total household wealth in Canada to this incredible $17.8 trillion. So you have to ask, where is all this new wealth coming from? Did everyone get a giant raise? Are businesses booming? Well, not exactly. And this brings us to the illusion of wealth, and what we call the paper wealth engine. The main reason for this wealth surge was a really, really strong stock market. You know, major indexes saw double-digit gains, and that directly pumped up the value of financial investments that Canadians hold. Now, what's so interesting is that experts call this paper wealth, and it's a critical concept. It looks amazing on your investment statement, right? But it's not actually cash in your hand. And most importantly, it's not spread out evenly across the population. And when I say it's not spread evenly, I mean not even close. The wealthiest 20% of households in Canada, they hold almost 70% of all the financial assets. So naturally, when the market booms, they're the ones who see the vast majority of those gains. So while those headline numbers look fantastic, they're hiding a very different story. For most people, the daily reality isn't one of booming wealth, it's one of increasing financial pressure on their wallets. And that brings us to the other side of the coin, And honestly, it's the more important side for most people. Let's talk about the unseen pressure of household debt, the real elephant in the room. This number right here, this is the one to pay attention to. For every single dollar of after-tax income a Canadian household has, there is now $1.75 of debt. And this is the third quarter in a row that this number has gone up. This is what we call your debt-to-income or DTI ratio. It's one of the most critical indicators of your personal financial health. Why? Because it shows exactly how much of your income is already spoken for by debt payments before you even buy groceries or pay rent. And this table basically shows you how lenders see it. They use these exact ranges to figure out risk. And you can see, once you creep over that 44% mark, you're in what's considered a high-risk zone. A lot of Canadian households are drifting into that territory. So at the exact same time that debt is going up, our collective financial safety net is shrinking. The amount of money Canadians are actually putting away into savings has fallen to just 5%. That means there's way less of a buffer for any kind of emergency. Okay, so here's the mystery. How do we put these two completely different stories together? How can this paper wealth be soaring while at the same time debt and financial stress are also on the rise for so many? Well, the answer lies in a concept that economists are talking about more and more, the K-shaped economy. It's this idea that different groups within the same country can be having wildly different financial experiences all at the same time. It's a great visual, right? Think of the letter K. The upper arm is rising, and that represents the people who own assets and are benefiting from that stock market boom. But the lower arm of the K is falling, and that represents a much larger group of people struggling with the cost of living, with growing debt, and with shrinking savings. So, what does this all mean for you and your finances as we head into the new year? Let's talk about some practical takeaways. For individuals and for families, the message is really clear. The focus has to be on building financial resilience. That means you've got to know your DTI ratio, you have to get aggressive about paying down high-interest debt, rebuild that emergency fund, and really budget with discipline. And this has a ripple effect on the business world, too. For entrepreneurs, it means you have to adapt to a market where your customers are way more cautious. And for everyone, it could mean that getting loans and credit becomes more challenging. Now, if you're watching this and you're feeling like you are firmly on that downward slope of the K and you're struggling with that rising debt, it is so important to know that you are not alone. And feeling overwhelmed is not the end of the story. There are structured, real options available to help you find a fresh start. The key thing to take away here is that the burden of debt does not have to be your future. A fresh start isn't just a hopeful idea, it is a legal reality. It's made possible through formal, government-regulated processes that are designed to give you real relief. You know, taking that first step is always the hardest part, but it can also be the most empowering thing you do. If you'd like to confidentially explore what your options are completely for free, professionals like the team at Ira Smith are actually licensed by the Canadian government to help you find a clear path forward. Thanks so much for joining me for this explainer.